Okay, guys, an important little sentence here when it comes to trades is build your case. So what we're going to do is I'm going to take a look again at what the market's doing. We looked at the Fibonacci retracement levels yesterday. I just thought I'd make a follow-up video because it's kind of playing out as expected. Doesn't mean it's going to happen, and we don't really care because we're not counting on anything to happen. Because when we do build a case, we build a case for both directions. Let me show you what I mean. So in yesterday's video, we were right here on the SPX. Follow my cursor right here. It was the market close, so we were up in here, and we had laid down our Fibonacci levels. Right, we grabbed this high. I gotta squint my eyes and look. Come down here to this low down here, and we were at this 50% retracement level right in here, and we said if price is going to resume downward, somewhere between 50 and 61.8% is generally where it's going to happen. So I would say it's a good time to start looking for the S&P 500 to retrace downward. Okay, we talked a little bit, but we want to build the case in both directions. Okay, so what if it doesn't continue down? What if it's going to move up more? Okay, it's always possible. So what we want to do is build that case, and I described a little bit about how that might play out in yesterday's video, but in this video we can see that here's our high now. Excuse me. We're making a higher high right here, and it would just certainly be cool if we made a lower high down here and began to move down tomorrow. And if that was the case, we could take entry somewhere in here. So in the case for downward movement, which is our preferred direction because of what's happened and because of the overextended nature of this move here, the fact that we've got this huge move down, the fact that we've got this fat retracement that took place over a 2-day period, literally retracing 50% of the move down, means that we would prefer this directional move here because we know we're going to get the best support, if you will, from the masses, from the volume with regard to downward momentum. The other case, and when I say build your case, I want you to always consider this. The other thing is we want to look at what if this thing goes up. Well, if it continues up tomorrow, there's really nothing we can do. I mean, we're not going to just jump in. Okay, so we get a candle like this. We want to use swing structure, a 3-candle break, some sort of base off of a lower swing high or a higher swing low, and we're not going to get that in this direction tomorrow. Okay, I'm sorry, today's Friday, so that would be Monday, the next trading day. So that's another reason why we prefer this thing set up for downward momentum, because that is the only momentum that we can get behind because of this swing right here, because of this retracement level, because of this large push down in this correction. We can get behind this. Right now we can't get behind that. That will change shortly. But what it would require, what would make us be able to get excited about that? What would make us be excited about that is this. Okay, price might come up, do a little bit of this action, come down here, form a low, form a high up here, and begin to base sideways and form a little bit of a channel. Okay, that would be one potential reason as we break out of here that we might be able to find long entry. Long entry to where? Well, maybe this would be the next level. That's just one potential entry. It is definitely not the preferred one. Let's take a look at the Dow Jones Industrial. And this, of course, is the trust. So same situation. There's our high. Here's our low. Here's our 61.8% retracement. Notice that we literally, let me zoom in a little bit more, we literally tagged that line today. I did not move that from yesterday's video, but the same situation's happening here. We've got this high, we've got this lower high forming. All we need is a candlestick at this point to begin making its way down. Same deal. I don't need to repeat it for you here, but the bottom line is we are looking at a move down, a correction to the 61.8% level, and we just need something in here to give us confirmation of the move down. A lot of stuff can take place. We could move over for a couple days before the move down, and it may just happen Monday. But anything that takes out this low here and begins to move down would be reason enough to consider it. And then, of course, I'd also look at the S&P 500 to make sure it's kind of compliant as well. Get support from both indexes, and then we can begin to look at a few other stocks. And I want to take a look at Facebook just as an example right now. Okay. Now Facebook's kind of a different animal because we did not really, if we use our Fibonacci retracements, okay, we got these 3 lower swing highs right here. So if I was going to use my Fibs tool, I would probably grab this high right here. And then the low is way down here, which is going to put our retracement at a real high number. And it puts it at 78.6%. And you can see we're getting some resistance right there. But that resistance is more likely from the, let's see here, let me delete that. Most likely from this low right here, okay? So no need to leave that up, okay? Right now we have retraced to this swing low right here, and definitely good reason to potentially look for a short trade. Again, if that's what the markets are going to do. All this is predicated on where price is going to go to. Because if price does this Monday, then I will not have even began to plan my short trade. That's why I said build your case. Build your case in both directions. Always be looking at what price can do either way. Here's the thing. If price moves up tomorrow, we really can't. Now, and again, there is a way to get into the trade if it moves up, and that is if you jump to a 5-minute chart, 15-minute chart. With the stocks, I'd more likely be on a 5-minute chart, and then we could look for the kind of swing structure I'm defining here on a daily. We could look for that on a 5-minute chart. And you could certainly trade that. That's not my style. Intraday stuff is not. But I could jump to those intraday charts, and I could do that just fine. I just don't like to sit in front of the computer all day. I like to try to find more long-term swing trades. A few days, a few weeks is kind of my style, and that's why we're focusing on the daily chart. And ultimately, I'm trying to talk about the market itself, so that's why I'm on a daily chart as well. We're not talking about intraday trading, because intraday trading, you can be long and short from one half of the day to the next, okay? But at any rate, we've got our resistance. We've got this huge move down. We've got this retracement level that is from this high, and this low down here, this extreme low, it's 78.6%. We could, just for the sake of, and I do this often, grab the high and grab the open of that candlestick and kind of ignore the anomaly there, and we'll see that we're still close to 78.6%, which is, let's see here, just see how. Oops, there's the high, and I wouldn't, yeah, we don't move much, do we? Now, and I would never, there's no need to go grab these highs out here. There's just, hold on, no need to do that because it doesn't really matter. We're measuring the most recent high and the move down in this case, okay? So still, we can easily plan for that push. If you guys miss this big move, there's a pretty high probability that it's going to take place next week. Could base sideways next week, who knows? But this is how you plan. Okay, you use swing structure, you use support and resistance. In the case of this move down, we're probably looking for about a 1 or 2 3-candle break. Simply means I'll use this chart as an example. If we got a candle here, and then we get a higher high here, then as price begins to move down and take out. Oh, you could use this low or this low as confirmation for this move down, and you can take a position in there, and you could put a stop up here. You could put a stop anywhere in here, truthfully, depending upon what kind of risk is in that area. But the bottom line is we want to use probably a 2 to 3 candle break to confirm the swing, which what it would be is a lower swing high. So we got a swing high, lower swing high, and when this completes, this will be a lower swing high as well. And the move could be significant. This move down will determine whether or not this market, at least for now, is entering a full-on move down. Because generally speaking, A equals C. So this move here and this move here, we should at least see this move down to be the equivalent length of this original move, which would put us way down here in the 60s on this particular, and this is Facebook. So from 90 to 60 would be good. However, if in fact, and this is a good lesson for you, if price goes down here, up here, and it does reverse, but it kind of goes like this and then takes off, what we have now is a higher swing low. So price for now is actually bullish in nature. And when we take out this high right here, then we're full on confirmed reversal to the upside. So plan your work your plan, build your case in both directions, and always anticipate price action doing well, I just lost my picture there. There we go. Price action doing what it quite often does while we're doing these plans, and that is stupid, dumb, sideways action. It's always a possibility. If that happens, of course, then we have a nice channel to go with, and if it lasts long enough, then we could go long or short. Okay, so those are your possibilities. All you got to do is look at price action, look at swing structure, and let price lead you into the trade. So that's where we're at, folks. Hope you enjoyed this video. Thanks for your time.